Hello members, welcome back to EXP-Invest presents Market Outlook, which we do every Friday. I am Kavita Agrawal, and like every weekend, today again we'll discuss what has happened in the market throughout the week. We'll go over the sector analysis, but we will begin with Nifty. Nifty has been giving some very interesting moves this entire week. There's been a big roller coaster. We've seen some important support and resistances being tested out this week itself. So now, without much delay, let's just move towards the chart and start our discussions. So we'll start with the 3-minute chart on Nifty, and let's see what we've had this week so far. So looking at the price activity from Monday onwards, we can see that the week started off with support at 18,200 being breached. After that, we saw a strong rally which led all the way to the resistance level, which I have previously stated in these sessions. That was 18,430 roughly. And then on Wednesday and Thursday, that is until yesterday, we saw Nifty take a downside correction again to retest the support level of 18,200, which has been a very important reasons for multiple reasons, which has been a very important support for multiple reasons covered over the sessions. Today, however, something wonderful has happened, and that is the resistance of 18,430 has been breached and Nifty continues to go upward. The 3-minute time frame, as we can see, is showing strong momentum indications. The RSI has formed a strong divergence until Thursday and now is sustaining itself very well above the level of 70, which is an indication that further rally can be expected. Now we move on to the 15-minute time frame to take a better look at the charts. Now what we see on the 15-minute time frame is very exciting. Firstly, the peak which was formed on 15th of May near the level of 18,457 roughly has been breached today, which means we are most likely going to see a closing above the level of 18,500. Now the RSI, as you can see, has always, since 31st March, since it first came above the level of 60 on the 15-minute time frame, that this time frame has been indicating to us that there is a very strong rally unfolding in the stock market. Now let's move on to the 75-minute time frame, the most important time frame that we follow. Now on the 75-minute time frame, there was some indication of correction which had unfolded on 15th May, after which we saw the index go back down all the way to the 18,000 level retested. However, now it has started to rally. Very evidently, the rally is unfolding with strong sentiments. However, on the 75-minute time frame, we still see that the RSI is still not above the level of 60. So whether it's going to take resistance or it's going to continue, we need to wait and watch. However, as soon as the RSI on 75-minute time frame goes above the level of 60, that will further establish this trend, this uptrend, and my target for this leg of upside is 19,050. The reason that there is an internal trend line which passes through the level of 19,050, which is why I believe that will be the first important resistance level. Taking a look at the daily time frame. So the daily time frame has been pretty positive again since 29th of March 2023. And here we can see that on the daily time frame itself, RSI is already above the level of 60, which is very positive. Not just that, in the course of correction which we just saw on the 75-minute time frame, the 15-minute time frame, in the course of this correction on the daily time frame, we saw Nifty barely breach the level of 60 on the daily time frames RSI, which again indicates that the bull trend that we're experiencing right now is very strong. All right. Lastly, let's take a look at the weekly time frame. The weekly time frame is not really contributing much to our information. Now, if you're wondering about these red lines, which you might be noticing for the first time on the charts, let me tell you something about these. These red lines are basically markings of the Gann dates, and if you're familiar with the Gann dates, then you know that these are important dates which actually happen to coincide with important phases of the moon, right? And moreover, these Gann dates have seen to have important implications for the stock market. So while I don't use them as active part of my analysis right now, I have done some back testing and I have come across some credibility in them. So now I'll be observing them for few weeks, few months in the live market, and as and when they unfold, as and when they are approached, I'll give you an update out of how things worked out for our index. Here from the existing markings that have already been crossed, you can see that on the 4th of May there was a peak, a temporary peak. The rally did continue after that, and on the second Gann date, which was around 19th May of my marking, it helped the market form a nice neat bottom, and then the fresh rally started from that date. So I'm expecting the rally to actually continue until the end of this month. We still have like one whole week left, so that's the expectation. But I'm not going to put my money on the basis of the dates just yet, because I've started following them very fresh. Anyway, let's move on to the Bank Nifty chart. One reminder, if you have any questions during the entire session, feel free to post your questions in the comments, and in between my conversations, I will take a look at the comments and help you out with your stock queries. All you have to do is just drop the name of the stock, drop your time horizon if possible, and if you're holding a position, also do drop the buy prices. It really helps in the analysis. It actually helps you in giving you better advice. All right, so now taking a look at the Bank Nifty chart, let's go back to Monday. So since Monday, we can see that the activity on the Bank Nifty has not been so great, because a very important support was breached on the Bank Nifty chart this week, which is the support of 43,700. So near the close of Wednesday, we saw this support get taken out. The index went well below the support level. It went all the way to 43,300, and then on its way back up, it did experience some resistance from the level of 43,700 before going higher. Now we can see that there is some divergence between Nifty and Bank Nifty, right? Because Nifty has already crossed the high of this week, but Bank Nifty is yet to do that. It's still below the level of 44,100. Why is this significant? So if you've been following the market outlook, I have been warning against making fresh positions in banks, because there are some indications of weakness. Let's talk about that on the 15-minute time frame. So on the 15-minute time frame, the last 3 peaks that were witnessed on the chart, they happened with RSI being still below the level of 60. Now usually this is an early indication that something unpleasant might be cooking in an index or entire sector. When this happens on the index, it indicates towards weakness developing in the entire sector, right? So that was the reason I have been warning people against making fresh positions. And we can see that on the 25th of May, that is yesterday, that correction finally ended, and the momentum which is now unfolding in the broad market is also taking Bank Nifty in a buoyant state, which is quite natural. However, that being said, I'm not as bullish on Bank Nifty as I am on Nifty. However, we know that they move in tandem, so I do have a target of the level of 44,800. But if you're trading in banks, swing trading, positional trading, or investing in banks, I will suggest you to use trailing stop losses for sure. All right, let's move on to the 75-minute time frame. Now on this 75-minute time frame, again, what I can see is that there is a kind of there is a clear-cut negative divergence which is formed on the Bank Nifty chart, and this does not make me very comfortable. We just saw the chart of Nifty and there is no such negative divergence developing there, but the fact that it is developing on the Bank Nifty tells us that we should look for other sectors to make swing trades and long-term positions, right? Let's move on to the daily time frame. On the daily time frame also there is a negative divergence developing here, which is again not a very good sign. So if I had to make fresh positions right now, I wouldn't opt for a lot of banking stocks. Firstly, because banking stocks have already given a very strong rally, and usually when a sector has multiple stocks giving massive rallies, it's not a very good time to make fresh entries there. So that is the reason why I will recommend you to steer clear of banks for now. All right, let's go to the next phase and take a look at all the intersector. So let's take a look at the relative intersector charts. So on this chart you can see all the sectoral indices of the Indian stock market, and we'll talk about it in a second. Let me just quickly take a look at the comments and see if you have any for me yet. All right, the comments, there you go. So we have Anshu, he's asking about what stocks am I bullish on. So Anshu, I refrain from giving free stock ideas in these sessions. I will, however, invite you to join my Telegram channel, the link of which I am dropping in the comment section as I speak. And through this Telegram channel, you will be able to access stock ideas on which I am bullish, and I'm recommending my members to purchase these stock ideas. So I've dropped the link in the of my Telegram channel in the chat comments. So just click and join the channel and you can connect with me there. So we have a guest who's asking about the view on Adani. So I was expecting a lot of questions about Adani stocks, considering the rally that we've just seen in them lately. So let's take a look. All right, so Adani Wilmar has unfortunately already given the rally. Now we are kind of past it, and if you wish to make a fresh position in it, you can do that, but I will suggest you to use a stop loss not bigger than 3%, because as you can see from the top, Adani has already fallen, AWL has already fallen 13%. So if you make a fresh position here and maintain a 3% stop loss, you will be in a good position to exploit a potential 20-21% rally from this point on. We have Jitendra ji, he's asking about Just Dial. So I wouldn't suggest a fresh position in Just Dial, because the momentum indicator is indicating some, tiredness unfolding. I will recommend you to use a trailing stop loss at the level of 673, which is percent wise, it's a pretty big stop loss. It's a 5% stop loss, but considering the way the stock moves, it's what you'll have to go with. In fact, I will suggest you to actually book profits, at least temporarily, in this stock, because it looks very unlikely that the rally is going to continue. If I gave you a target at the level of 773, it would, basically be predicting a breakout, which was not very good. So I will recommend you to book your profits in Just Dial. If you're waiting to make a fresh position, then I would say there are other better counters available. Just yesterday, I gave a couple of stock ideas to my members, and those stock ideas today have moved nearly 5% in the live market. So that's why I'm saying there are much better stock ideas out there, and you can join my Telegram channel if you're interested in knowing some of those names. So we have Raman ji who's asking about Karnataka Bank. Okay, Karnataka Bank. Very interesting chart unfolding. Very interesting price action. Strong bull trend in place and a fresh leg of rally has just begun. So in Karnataka Bank, if you want to make a fresh position, I would suggest you wait for this rally to cool down a little bit. Just like you saw here, there was a strong rally of 10%, but then the stock did correct around 5 to 6%. You know, that is the kind of cooling down that I'm asking you to wait for. So I think it would be a good entry point somewhere around 140 rupees. And with that entry, you can actually hold it for any medium term to long term. I think the stock is in a very good position to retest the level of 165 soon. I do see there is a strong resistance here. So however, the developments on the weekly time frame suggest that the stock might give a pretty strong breakout. So yes, Karnataka Bank looks very, very attractive, and I can see you're holding it since 143, which means you probably just entered. So continue to hold on with a stop loss not lower than 137. So this Sagar, this is the Telegram channel. It's called EXP-Invest in. So the website is exp-invest.in and the Telegram channel name is EXP-Invest in. So you can simply look that up, or you can, it's easier to just click the link in the chat. We have Harsh asking about Ambuja Cement. Alright, so Ambuja has given a massive breakout above the level of 405 and it is looking very, very attractive right now. So there is a very steady rally unfolding here, some resistance coming in from the 200 EMA and the 5, what EMA is this? Let me just see. Okay, this is the daily time frame 100 EMA which has been breached. So I think Ambuja Cement is in for a good rally. It's getting really difficult to give you a target, but I think it can retest the resistance at the level of 475, which is around 10% above. So what's amazing about Ambuja Cement is that the risk reward ratio is very attractive. So if you want to participate in the 11% rally potential that we just unlocked, you should maintain the stop loss at the level of around 415.5 in Ambuja Cement. Alright, we have Manohar ji. Good afternoon to you too. You're holding GE Shipping at 635. I will request you to please post one stock name at a time, because there are a lot of people, and if I respond to cluster responses, then high chance that other people will get missed. So I will look at GE Shipping, and for the rest of the stocks I will request you to either join my Telegram channel or post them again one by one. All right, so the 15-minute time frame is looking very promising here, and the 75-minute time frame is suggesting that, okay, so the stock is in very good bull run as it is, and I would expect this rally which has been unfolding with pretty good volumes to continue. I think if you take a look at the candlesticks here, the way they are forming these long lower wicks, it suggests that there's a lot of buying pressure which keeps pushing the stock higher and higher. So it's only a matter of time that the sellers will get worn out by the buyers and the stock will unleash into a rally. So considering the wonderful trend that's unfolding, I would keep a minimum target around the level of 750 here, and of course the stop loss is again very attractive. at 657. So this is what I meant. The market right now is looking very attractive. If you're somebody who's been sitting on the sidelines waiting to participate in swing trading, I would say now is a very good time to do that. However, if stock picking is not your strongest suit, I would suggest you to get associated with a research analyst. For instance, I via EXP-Invest help retail traders make swing trades in the stock market. I do research and I share stock ideas with allocation, targets, stop loss, sector, riskiness, everything with you. All the information that you need to participate in an idea, along with trailing stop losses as and when the stocks move, the best time to enter, best time to exit, everything is shared by a Telegram channel and a Google Sheet. So if you're interested in that, again, I will remind you to join my Telegram channel, and through that you can find the subscription link if you're interested in swing trading like a pro. All right, let's get back. So Shiva is asking about Engineers India, and he wants to know whether it's a good time to buy or not. So I would have to say no, because as you can see, Engineers India is one of those stocks which have already rallied, and right now the market is giving you a lot of opportunities with respect to stocks where the rally has not yet unfolded. So I'm not saying Engineers India is a bad stock. It's a very, very good stock. However, it is very, very overheated. So on this daily time frame chart itself, if you can see, the stock has a tendency to give beautiful up moves. For instance, here it gave a 30% upside, but then soon after that it gave a 15% correction. It gave a 44% upside in 100 days, and then it gave a 22% correction in 65 days. Now it's given a 55% correction, and if you can see right here, let me make this bolder for you, there is a trend line, and this trend line is a very relevant trend line. It has acted as important support multiple times, and I think it poses a big threat. So from a risk reward perspective, it's not very attractive. In fact, it has already posed threat. Today, when the market is so bullish, Engineers India is quite bearish today. If I tell you in percentage terms, it's down. How much is it down? It's down 5%, right? So I would not recommend you to make a fresh position here. Wait for it to correct. I think it can correct all the way to 80-90. When it does, I will prefer to take a look at the chart again and see whether or not it's giving an indication of bullishness before making a fresh entry. Okay, so we have Ganesh who's asking about Easy Trip. Let's see the chart of Easy Trip. Easy Trip planners, there you go. Nothing exciting here, to be honest. Again, there are much better counters to participate in. I see a strong resistance coming in from this cluster of moving averages. So until and unless the stock has given a sustained breakout above the level of 50, I would not touch it with, I wouldn't touch this. I wouldn't put my capital behind that. So that's for you, Ganesh. Let's see. We have Harsh. He's asking about PEL. Someone else asked me about PEL today. So I will tell you what I told them. Someone asked me in my Telegram channel to analyze the stock just this morning. Now again, on the stock of PEL, firstly, the stock is in a very strong downtrend, and in this downtrend it has been taking strongly and repeatedly, it has been taking resistance at the 200-day moving average on the daily time frame, which is this blue faded line that you can see on the chart, and I think this is where it will most likely again see resistance. So it has an upside of barely 5% left in it, and if you were to make a fresh position, I would not be able to suggest a lower than 5% stop loss to you. So the risk reward ratio is very unattractive, so I would suggest you not to make any position here. If however you have an active position, for an active position I would suggest that you maintain the stop loss of 759 with a target at the level that I just mentioned. 815. However, I am not very positive in PEL at this moment. So Dilip, I will request you to please connect with me via my Telegram channel, and through my Telegram channel, I'll be happy to answer your queries about the subscription plans. All right. So there is a reminder from the ET moderator as well. If you wish to book one-on-one consultation sessions with me, you can do so by clicking on the link which has been shared by the ET moderator. The advantage of these sessions is that in this session you can ask me anything about your next stock market approach, your strategy. If you're a beginner and you don't know how to proceed, I'll be more than happy to help you out. If there are lots of concepts which might be confusing to you and you want someone to sit you down and help you understand them in very simple language, I'll be more than happy to walk you through those concepts. And at the same time, if you have stocks where you're stuck and experiencing a loss or a profit but you don't know whether you should exit them or not, I can help you out with a live analysis session and a one-on-one consultation session. So the link for that is in the comments. All right, so we'll take a look at other queries shortly, but let's get back and take a look at the sector charts. Now this sector chart is looking very attractive because just look at the gains which has been posted this week, right? I mean, metals, it's up 5% and it's not even a one directional move. It gave a massive 6.5% rally by Wednesday, and I have been talking about metals looking very attractive in my Telegram channel, on my Instagram. I have also mentioned that in one of the past market outlook series videos that metals are looking very attractive, and since this week we have seen that magic unfold on the metal sector, in the metal sector. So on Tuesday we saw up to Tuesday there was a massive rally of 7%. There was some correction on Wednesday thanks to global cues coming in from the US. However, things got better and we can see that metal got right back on the track of bullishness. So this is what I was saying, that look away from banks. There are other sectors giving you wonderful opportunities to make some good money. Metals, pharma, IT. These three sectors have been mentioned by me repeatedly over and over again as the next probable opportunity hunts. We can see the pharma and the healthcare sectors are both more than 3.5% plus this week. CNX IT sector is also 3.6% in green. Metal, the media sector has been a surpriser. It's up 4% as of now throughout this week. However, I will discuss the media sector chart with you right after this. The consumer durables is again looking very attractive with a 3.29% rally. Realty sectors, again, see, there is huge opportunity in the market right now. I cannot emphasize this anymore. The fact, the charts indicating that there can be a potential rally up to the level of 19,000 is massive, okay? And if you're not taking advantage of this situation, that would just be unfortunate. I will again warn you that among these sectors, so auto sector has already posted pretty good rally, so stay away from that. Energy sectors, you have to be very selective in terms of stocks, because there are some stocks which are looking very good, some stocks which are not looking so good. Banks, I would suggest you avoid. Again, there are few select banks like the one that I just discussed, the Karnataka banks, looking very attractive, but then most of the other banks are giving signals of weakness and you have to be careful, especially if you have active positions there. All right, so as I promised, let's go back and take a look at CNX media. CNX media chart. Oh, there you go. That's the reason I can't see it. Okay. So why I wanted to show you this chart is that the media sector as a whole has been experiencing, a lot of whiplash. Last few years have not been very attractive. Since 21 we've seen a very on and off decline on this stock. I mean, there have been rallies, but very unsustained rallies. Now what is happening is that sector is giving a lot of hope and is edging towards what I would call a breakout. Now, on this 75-minute time frame, for instance, what we see is that the index itself has formed a strong base around the level of 1660. But on the RSI, something even more interesting has happened. There is a strong positive divergence which has developed on the 75-minute time frame in the CNX media chart, which indicates that it is, it pays to look at media stocks to for opportunities to invest in and for swing trade as well. So right here I am expecting around 10 to 15% rally in the media sector from this point onwards, which could translate into 30-40% rallies in the stocks. Now, of course, again, you have to go stock specific, and each stock in the media sector needs to be analyzed with respect to opportunities. So that's what I will be doing next week. And since the breakout has not yet happened, I will wait for the breakout to happen on the CNX media sector chart before going long on specific stocks, right? Because some rally has already happened here since 22nd of May, and I don't want to get into an overheated sector which has a tendency to go down. But if this is a potential low which can only be confirmed after a breakout above the level of say 1750, then I will want to go long on media sector. So if you're interested in those picks, again, my Telegram channel is the place to be. That's where you will get to know about them. All right, so now we are drawing in to the end of the session. We have 10 more minutes left, so I will take a final look at your comments and help you out with your stock queries. So we have Yashwant Kumar. He's considering okay, so Yashwant ji, I'm sorry you're asking me about bull call spread, and I am not an expert in matters of the options and futures. I am a pure cash trader myself, and so what I'm going to do is I'm going to help you with the analysis of the Reliance chart, and I will leave the rest to you. So on Reliance chart, what I can see is that it's got a strong resistance at the level of 2500, and it is taking that resistance. So I personally wouldn't put my money in Reliance unless it gives a breakout above the level of 2509. It does pain me to acknowledge the fact that I missed this rally which unfolded in Reliance, not entirely but partly, because honestly I was bearish on Reliance and I was waiting for it to go down. Looking at this chart, it does not look like I am very wrong on that note, because there is a downward trending, there is a down trend line, but yeah, we do seem to be breaking above that, right? So I will wait for some more strong movement to come in, especially above the level of 2500, before I decide to go back long in Reliance. So we have Mahesh ji is asking about SBI Life. All right, so SBI Life, let's clean up the chart a little bit for some. Okay, I need to draw trend lines, so give me a moment here, and let's make that normal size again. Okay, so that's a first trend line. It's pretty legitimate, and now let's just clone that to touch all other key price points, and then we are going to begin our analysis. All right, that looks fine to me. So now we look at this. All right, so there was a positive divergence which developed on the 11th of March, and then a strong rally has ensued. I wouldn't call it strong, it's just been 13% rally in a matter of 70 days. Not really strong considering the momentum of the market. Plus the stock is in a downtrend. It has recently peaked out at the level of 1350. Sorry, 13, I think that was 35, with a negative divergence on the daily time frame. That is not a good development at all. So I wouldn't trust this rally right now, despite of the fact that, you know, so the thing is, there is a trend line and there is also resistance coming in from here. So see, these points have been touched multiple times, right? So I wouldn't choose SBI Life right now for a fresh rally, considering the many attractive opportunities out there in the market, because it has a strong resistance at the level of 1220. So if you're holding an active position here, I would suggest you to use the stop loss at a level of no lower than 1173 in SBI Life for a target of 1220. So ICICI Prudential, let's take a look at ICICI Prudential for you now. Okay, again, not a very strong counter. I see I did have a position which I exited near the top, and I have chosen not to enter this yet, because you can see that there is a very long downtrend which has been going on here, and whether or not this dual support are taken at the level of 420, whether or not it's sustainable, or not, it's very difficult to say right now. Honestly, the charts don't look very promising for a fresh entry. I mean, sure, the market is very buoyant, and it's possible that the stock also hits you know, a level higher than maybe 465, but only after it has given a close above the level of 465 would I be comfortable committing capital to this counter. As of now, I would not make fresh entries here. But yes, if it does come back down to 420 and show some resilience, then I might consider it. More than 420, actually 400 is a very, very attractive level to make fresh positions here, because as you can see, strong trend line, strong supports there, and these white lines are actually potential entry points that I am looking out for. So 420 and 400 are actually good entry points. Right now, I would suggest you to avoid. So we have Subramaniam. He's asking about Finolex. Let's see. Finolex India. Do we have? Are you asking about Finolex, Fin Cables? Of, I guess, Finolex India. I'll go with the this is, I guess, Industries. I think I'll go with this one. Oh yeah, Finolex Industries. Okay. Let's see. Strong perpetual uptrend, but is there a reason to strong uptrend, and the stock is close to a good support and has started to turn up, and the stock has given a very strong positive divergence on the weekly time frame, which this is all a bunch of very good observations to make. I mean, when a stock gives a positive divergence on the weekly time frame, you do not take that lightly. In fact, what you do is you make long-term investment in that stock. So what's even better is that the stock has taken very good support at the 200 EMA on the weekly time frame and has turned up. I mean, this is very textbook reversal that we are seeing here. Sure, the stock is taking some resistance at 195, but okay, 195 resistance is a little problematic. However, I would suggest that Finolex is looking very attractive to start making positions on dips, which is exactly now, because the stock has just taken a very good dip of around 10 to 11% from this resistance of 195 and has started to turn up. Plus, look at the volumes. Wonderful. Stronger volumes than the past few candles of downside that we have seen. This is very promising, so I would suggest that you go ahead and make positions in Finolex. As for the stop loss, see, if you're going in for the long term, then please maintain a 12% stop loss, which is at the level of 157. So if you're making a position for long term, then your stop loss would be 157. However, if you're making a position for the short term, then I would suggest you go in with, I said 157, right? So for the short term, you can go in with a 5% stop loss at the level of 170. And for the target, short-term target would be 10%. Oh, not a very attractive risk-reward ratio, unfortunately, I know. That is why I'm suggesting that Finolex industry is looking very attractive to make positions for the long term. The minimum target here is 30% at 236, but considering the trend and the trend lines and the beauty, like the consistency with which it has been respecting these trend lines, I would hold out a multi-bagger target on this, with the level of 375 being very probable in a matter of how much time does it usually take to travel trend line to trend line? I would say 1 to 2 years. I know it's very bullish, but I'm just saying what the charts look like. Okay, so we have a query for HDFC AMC. Alright, so HDFC AMC today, it has given a wonderful move, and HDFC AMC has taken a very strong support at this last trend line which I have breached. Few days back it gave a breakdown below this last trend line support. However, it came back to retest this low, which was around 1700, and has turned up. Now just look at the volumes with which it has rallied today, right? So this is very promising. Not only that, this downside which has been experienced since, I would say, the 16th of May has happened on relatively lower volumes. So when the downside is on lower volumes and when a breakout is on strong volumes, it's a very, very positive indication. However, today, since the stock has rallied nearly 5% already, I will suggest you to wait before you make a position. Here, see, look at the 15-minute time frame. Okay, the RSI is well above the level of 80 and it is not sustainable. So we can expect some, cooling down to happen here. So I would suggest that you place your buying bids at levels like 1822, 1800, 1770. So basically put your buying bids and use a stop loss of 1728. So the stop loss is 1728 for a target of at the least 1940, which means from the current market price it's around 4% upside. And the stop loss that I just told you about, let's see. Yeah, not a very attractive risk reward ratio at this point of times. I would want to see the stock give a sustained breakout above this resistance zone that we are looking at. Okay, I do think the stock can go up to 2200. If you can see this green line, it's been marked there since quite some time, because I've been observing the stock ever since it came around this trend line near the level of 1800. So 1800 to 1700 is when I've been accumulating the stock in my client portfolios as well, and I think it can continue to rally up all the way to 2200. So that's that. So we have more queries from Avinash ji. He's asking for IDFC First Bank. Finally, some new bank. Okay, what a rally in IDFC First Bank. So it gave a very strong breakout here on the 18th of April with good volumes and has respected that. Not just respected it, the volume has been phenomenal, and I think this rally can continue all the way to this trend line right here, which coincides with this resistance back from 2016, and I think the target of 84 is very, very active here. So if you want to make a fresh position, I would suggest you use a stop loss of, unfortunately I have to give you a very big stop loss of 6.5%, because you know the stock is in strong momentum and a smaller stop loss won't do it justice. However, even with the big stop loss, the risk reward ratio continues to be more than 3, which makes it very attractive, very participatable. So go in for with a target of around 84.5. All right, let's continue to look at the comments. We are out of time, but you know I don't want to leave anyone waiting, so we'll continue with that for 10 more minutes. Let's see. So I did Piramal Enterprise already. We have Ajay ji is asking about LIC. All right, so in the stock of LIC there is some bottoming out which is happening, but honestly I don't trust it. I do not trust this stock. Sorry for saying that, but I guess there's just not enough data, or the data has been too like the charts don't look so good, you know. I think there is strong resistance at this 200-day EMA, which is 616. It's a very strong resistance level. So you see there is the 200-day moving average, there is a trend line resistance. Both of these are indicating resistance. However, the 75-minute time frame looks bullish, but the 15-minute time frame does not look bullish. In fact, there is a negative divergence developing in there, which does indicate some correction, at least some correction is due, and it also has support at the level of 585. So if it comes near there, then maybe check back with me about, you know, making potential entries. But for now, no. So Ganesh ji, you're welcome. And Harsh wants to ask about Jubilant Pharma. Okay, Jubilant. What stock is this? I don't see it. Jubilant Pharmova. Okay, I'll move on. Let's see. We have a couple of queries about Bharti Airtel. So let's take a look at Bharti Airtel. All right, let's see. Alright, so I wouldn't recommend you to make a fresh entry in Bharti Airtel just yet. However, if you do have an active position, I would suggest you to use a stop loss of 798 and a target at the level of 857 for Bharti Airtel. I've already recommended LIC, so let's take a look at Zomato. Not recommended to make a fresh position because the stock firstly is not very reliable, secondly showing negative divergence. The maximum target I can suggest you is 73 if you're holding a fresh position. However, if you are holding a fresh position, please do maintain the stop loss, and as you can see, the stop loss will have to be pretty big here because the stock has a tendency to give lots of whiplashes and I hate it. But if you have an active position and you wish to continue to hold that position, I would suggest you not to do it. I would suggest you to please get out of this stock because the potential target is just 6% and the stop loss is nearly 8%. Not a very good position to be in. Lots of other better opportunities out there, Mr. Rao, so please take advantage of those. We have a query for Ujjivan Small Finance Bank. Let's take a look at Ujjivan Small Finance Bank. Okay, very, very good volumes, very good trend unfolding. Just gave a breakout above the previous high, but still taking some resistance. I would suggest, if you want to make a fresh entry here, wait for some cooling down. See, the 75-minute time frame and the 15-minute time frame are telling us the same thing, that sure, there is a strong rally unfolding, but I want to take some rest, is what these time frames are saying. So I think the stock has good support somewhere around the level of 30, and that is a 10%. 10 to how down is that? Yeah, it's around 11 to 12% lower. So that is where I think a potential entry could be made. But right now, please avoid. And if you have an active position, then I would suggest you to book your profits. Okay, we are okay. We have a query from Aryav. He's asking for Equitas. Okay, sorry Aryav, the OG one was not for you. It was actually for another member who's also live right now. Let's take a look at Equitas for you now. Fresh position, again, not recommended. Even though the stock has given a breakout, I have reason. So see, the stock has given a breakout here, but I have reason to believe that this might be a fake breakout based on the volume. So the volume is trending downwards, but the stock is trending upward. Usually is a very early indication of exhaustion. The same story is being touted by the 75-minute time frame chart and the 15-minute time frame chart, which are clearly showing that they are tired, they don't want to go on anymore. So if you have an active position, don't book your profit just yet, because you know the stock is in strong momentum, but please do maintain a stop loss at the level of 82. All right, let's take a look at the last stock, which is Tata Consumer. All right, it looks like a fresh rally is unfolding here. However, I would not be very comfortable making a fresh position just yet, until and unless the stock has given a strong breakout above the level of 805 with great volumes. Until that happens, I would not touch the stock. If you have an active position, however, not looking very promising. My short-term target for you would be 800 at max, and you would have to maintain a stop loss, pretty big stop loss of around 4.5%. So in other words, book your profits. It's not looking very, very attractive. But if it does give a breakout above the level of 805 and the volumes are strong, go ahead and make your position again. But Tata Consumer is not looking very strong right now. However, if it does give a breakout above the level of 805, that would be the beginning of a fresh leg of upside, and then we can expect some strong rally on the counter. All right, so profit booking, I have around 50% profit on this now. Should I hold for a long term? All right, Aryav, that I have already helped you out. Okay, so with that, we've come to the end of this session. Thank you so much for joining in. I had a lot of fun doing the session with you. I hope you had a good time too. If you did, don't forget to give a thumbs up to this live session, because it really helps me reach more viewers like yourself. I will see you again on Monday in the Retailer Traders Special Series, where I bring you one topic of knowledge. I make a presentation and I share that with you. I try to share my knowledge, my experience in this session. And these lives happen every week, 3 times, on Mondays, Wednesdays and Fridays at 2:30 p.m. sharp. All right. So with this, I will take your leave. Thank you so much for giving me your time and listening in. I will see you again on Monday. Namaste.